Jim Rowe, who's going to be speaking about insights from Environmental Asset Exchange. Jim is the founder and chief executive officer of Capturient, a regulated environmental assets exchange. It is a validator, registry, exchange, all based on blockchain for carbon and biodiversity credits, water rights, and other environmental assets. Jim has 30 plus years of experience in capital raising, deal structuring, and finance, including project finance, equity, and debt securities, risk management, commodities, and digital securities. He has originated and arranged funding in excess of $10 billion. Jim is a chartered financial analyst and maintains Series 7, 14, 24, 28, 63, 79, and 99 FINRA securities licenses. And if you'd like to use that for your lottery ticket number, please go ahead. He holds a BS in finance from the University of Wyoming, an MBA in finance from Arizona State University, and a CAS from the American Graduate School of International Management, Thunderbird. Jim.
Thank you very much. And my kids still don't appreciate me, so it's all goes the same. How do you move the, just hit the green button? Perfect. One last thing, I hate to be the one second to last in front of happy hour because I love happy hour. But the one thing I didn't put on my bio is that I'm also a former CEO of a public oil and gas company and an oil and gas operator. So if you really want to get the answers on P&A liability, I'd be happy to answer those questions too. Anyway, I also am the founder and majority owner of another company called eToro. We are a broker-dealer licensed in all 50 states and all districts and territories. We also have 2 RIAs. I'm the chairman of a digital transfer agent. We're also NFA, CFTC licensed commodity pool operator, Texas insurance broker. I run a crypto mining shop and a valuation company at the same time. About 10 months ago, 12 months ago, I started on the venture of applying for and getting just recently a regulated environmental assets exchange license in the Bahamas. And that's a little bit of a challenge after Sam made a little bit of a mess down in the islands there, but it's still valid. We are going to be expanding to other jurisdictions. We're not just limited to carbon. We're going to be doing other environmental assets. We don't call it a carbon exchange. We actually call it environmental assets exchange. So I'm going to give a little bit here, if this works. There we go. So we are actually a validator as well as a registry and exchange. I'll go through some other charts here in a little bit that give you a little bit better idea of exactly what we're trying to do. We are really focused on risk management. So we look at our client as the CFO and C-suites of companies around the world. So we don't write the rules, we don't apply them. What we do is try to find instruments that companies can actually hedge against, trade, et cetera. So coming from my background, actually my real background is I'm a structured finance person. So actually for a little company you guys may have heard of called Enron. So between the oil and gas and Enron, I'm okay. The real trick here is the transparency. A couple of the other speakers have brought that up. This doesn't work too well, does it? There we go. So we have 6 pillars of what we're trying to accomplish here. Obviously, standardization, authentication, compliance, transparency, assurance, and exchange. So by the way, Peter, if I can swap out this deck later for all of this audience, because every once in a while, you should check the work of your analyst. So, but the responsibility is all mine. So I will fight for my analysts all day long, but I need to add some slides here. The real focus for us is the trust and transparency in the market. Being FINRA licensed as I am, we take that responsibility throughout whatever we do around the world. In fact, we are not void of those responsibilities even if we do a transaction outside of the United States. So when you're FINRA licensed, you do know that. So we do have a higher level of expectations and responsibility. I don't need to go through this. I won't read this slide, but these are a few of the things that we're trying to achieve as far as it being a regulated entity. So for me, operating a regulated entity is not that much different than what I do on a daily basis. For us, it's also I look at it as doing a security, which by the end of this year. It may be anyway. But we look at it doing like I'm issuing a security. So background checks, KYC, AML, everything you possibly can to basically give trust and transparency to that buyer. And that's the key thing here. You've got to get that buyer comfortable in exactly what products you're creating, selling, distributing, or trading. So what are we focused on? Unlike some of our competitors that are nature-based, I am in Houston. It's kind of ground zero for hydrocarbons. Makes a lot of sense given the just sheer numbers of talent, engineering, personnel, financing, et cetera. One of the biggest commodity cities in the world. So it's easy for us to get talent at the same time. So it's a great place to be. Not only that, but for buyers and sellers. We're focused on what I call the 4 uglies plus 2: oil and gas, mining, petrochemicals, power, as well as real estate and high tech. Some of the differentiators. This is a slide I'm going to ask to have replaced because there's some mistakes in here. But what we're doing is actually creating something called a PEAK, Performance Environmental Asset Credit. If for some of you that would be like a reserve report on steroids, it is really a document to be created that can be used as a financing document, which to me, that's the important thing. Many of these projects need to have conditional or provisional indications of what exactly, how much credits they are, what types of credits, where they can be better exploited, et cetera. So it's important to actually think about what you're doing in all of this. And that is, can we figure out a faster way to get good projects financed? That to me is a driver for me. And if we don't do that, we're wasting a lot of time. So we call it PEAK. So I would be happy to expand on that a little bit. We actually are providing warranty coverage in everything that we do on the platform. So to give the buyers and sellers more trust and comfort, we are going to be warranting our product. It was too difficult to actually insure because the cost of it would have been grotesque between the difference between warranties and insurance. We're using DLT because we're using Adara Hashgraph and we're not using blockchain. For those of you that know a little bit about blockchain and DLT, I can tell you there is a significant difference there. Blockchain is just one form of DLT. I learned all of that when I owned a crypto exchange, but that's for another day. On the exchange, we will be operating effectively 24/7, 365 days. We are going to be expanding through to a number of locations, Nassau, Zurich, and the UAE, probably have some operations in Asia as well. The one difference that we're also going to have is that we will have financial activity on our exchange as well. We are licensed as a DARE recipient in the Bahamas. It's a digital asset regulatory exchange. It's really not an exchange. That word is so misused and abused, it's not even funny. At the end of the day, it's really a clearinghouse. So it's more book building, matching than it is a true high frequency trading exchange that gets a lot of people wrapped around the axle. What do I mean by investments? That means we will be marketing direct investments, meaning actual securities, as well as funds on the same platform. We'll have a variety of B2B to C programs as well. Those you'll see in the next few weeks as we announce those and go forward. The majority of our team all comes from investment banking, commodities, et cetera. Very few of them actually come from the carbon world or environmental world. To us, it's more important to have the investment banking side of the skill set, finance, et cetera. Trick to this. You guys, you've seen it all at a lot of the validator activity. Let me talk a little bit about the value chain, because I think this is a differentiator here, is that we are not a verifier, we're a validator. We also have the registry. We will be self-custody. We will have it all on the Adara Hashgraph and have a custody. We will have a third-party custodian for the private keys, for those of you that are familiar with the process. We will be tokenizing every product and everything. So that will be pretty interesting how we're really leaning into that. We do the sales and exchange. We have a research company affiliate. We will be doing that as a third party. We will also look to have other partners in that space as well. We have investment banking, just having this process up. We receive a lot of developers that come in and would like to have not only their validation of their credits, but they're also looking for financing. Well, for those of you that are familiar, that would be a massive conflict of interest. So we have to separate that between our Capturient entities and our eToro entities. As I mentioned, we'll be promoting funds and direct projects at the same time. Many of the clients or competitors on this slide may have adjusted some of their competitive nature in the last few weeks or months, but this is where we are today on our program. As I mentioned, we are not just carbon credits. We are looking at biodiversity credits, water rights, et cetera, anything that happens to fall under the hood of environmental assets. So it's important for us not to be limited just to carbon. To me, carbon is a product. It is one item amongst many, because what we're really trying to create is a store, not a product or just a simple exchange. It's a big differentiator for us in the sense that there will be a lot of groups and a lot of good people in this room that have products. Well, we look at it that we'd rather be Amazon for environmental assets than necessarily creating a product. The other issues for those of you in the United States, resilience and resilience bonds and activities are a big thing. We will see a lot of that because the insurance industry is very interested in that space, as well as we will be looking at issuing new types of green bonds and new instruments. So stay tuned for all of that. Just a little sales point for my friends at Hedera. For those of you that are not familiar with Hedera Hashgraph, they are the lowest ESG footprint protocol. A fantastic group to work with. They've made a real concerted effort to be the leading, if not number one, protocol in the world on this. About 150 of the top financial organizations in the world are part of the Hedera network. And some of those we've already had very strong relationships. You don't need to see that. Some of the team, et cetera. Let me find something that I'll leave it there. Just a few more comments and activities. If anybody has to apply for a regulatory entity, I see David here in front of me. He knows what FINRA and the SEC is like, but doing something internationally is tough. We actually have a conditional permit or conditional approval right now. I need to get a bank account and my custodial contract signed, and then I'm off to the races. We plan on being fully operational April 3rd from the exchange perspective, and our tech stack will be ready, I've been promised, in about 42 hours, but we'll see what that transpires. Tech guys always promise, but they always come up a little short. We also are applying for a Swiss license at the same time. Most of our activity is going to be non-US. We believe about 35% of our activity would be US activity, which gets me to an interesting point since I've been working quite a bit with our good friends down in DC. And it's kind of who's going to be a race to see who's going to end up regulating this, because I can guarantee one thing: it is going to get regulated in the United States. After FTX, Silvergate, everything in the last 10 days, it's going to happen. So it's whether or not it's going to be between the CFTC or the SEC. And for most of the people in this room, you better pray it's the CFTC and not the SEC. The difference is going to be wide, going to be very different if you have one over the other. It could be both. And actually, if you really look at what's been issued in the around the world, you can make a pretty strong argument about five to about 10% of those are actually securities. So you could see the same issues that you had with crypto as you do in the environmental assets world. And since the US is the only, well, not maybe the only, but the key regulators in the world that guide by penalty and enforcement versus actually providing guidance. Most countries and the regulators are more on the guidance side. US regulators are much more on penalty and enforcement. It's a lot of fun. So back to just being a risk management platform. That's our key focus. We are in the process of acquiring companies that can help us and grow internationally. We are obviously keen and focused on avoiding conflicts of interest. So we have already started the separation. eToro incubated the entire platform, and we will be separating it hopefully fully by the end of the year. Takes a little bit of time to get that knocked out. As I mentioned, our team is pretty robust. We'll release the team here, who's on the team here in probably the next week or two. The key thing for us too is be able to have multiple locations, but really we're a Houston-based firm, and we really want to focus on those, what I call the four uglies. So happy to answer any questions.
Questions for Jim?
Is it going to be on P&A liability?
It's on the water rights. Can you just expand on what you're kind of planning when you bring up water rights in this conversation?
Yes, we look at water rights as something that's been kind of a trapped illiquid activity. So much like T-Boone was trying to do a few years ago, we will be looking to have financial instruments that will be able to buy rights. There's a lot of trapped water. I'm going to go on the U.S. spectrum right now. A lot of trapped water, and unusually about 70% sits under Native American lands. So there's going to be a very interesting play on water in the United States. Now, around the world, I think you're going to see much more recycling, et cetera, because most of the water belongs to the state. So you have different things, but we will be looking to have actual structured products in that space.
Hey, Jim, Ted Gromiller, Responsible Alpha. And thank you very much. Plastic credit. Can I do two questions? So plastic credits, do you see that sector growing?
I do, but if I told you I was an expert in it, I'd be lying to you. So I do believe that. Actually, one of my colleagues on our team is actually getting real deep in that, and I'd be happy to connect you with Pedro.
Excellent. I'll take the second one offline. Thanks.
Okay.
Yeah, quick question. I see you plan on playing across the value chain. So many people don't do that because I think the potential perceived conflict of interest being validator as well as the exchange, or playing different roles in the same sector. So how do you plan on doing that or handling that?
Well, as I said, it's not perceived, it's true. We do have a conflict of interest, and that's why we're working to separate it. We're also working with our board of advisors to make sure that we've had a review on that. Given that I am multi-licensed in a lot of jurisdictions, I take that very seriously. So not to have those conflict of interest, but you will always have them. I can tell you one thing: Jamie Dimon has conflicts of interest too, no matter whatever audit committees and everything he has. You just can't get away from them. You do your best not to. We're going to restrict certain. I mean, we've already set up separate systems. You do have a lot of the proper things, because we do have we do have rules today, even that we have to be separated. Within about 2 years, my hope is that no one's on both sides of, we have a very, very strong Chinese wall. Sure, please.
Let me just repeat the question for the people at the back. So the question is, David sees the role of the standards companies, but he's just wondering how these guys will work with them.
So not to reinvent the wheel, we will use most of the same standards and hope to apply a little bit better type of activity. But if you really get down to it, there's probably 2,000 methodologies if you really wanted to get really grand. I mean, the really crazy thing about this industry versus really commodities is that it's really hard to be a commodity when you have 2,000 different type of variables versus, oil is oil, natural gas is natural gas. You adjust it by API. There's things that you can adjust for, but there are so many toggles and variables in this space. It's very difficult to, but we're not going to reinvent the wheel. We'll work with various groups to do it. The other thing is we're agnostic to where it comes from. So we'll take other validators. We're not solely for ourselves on the exchange. We've got to be pure on that.